Okay. Hello everyone. It gives me great pleasure to introduce our guest speaker today, who's Willard Mwemba, who is Chief Executive Officer at COMESA. Willard has very kindly agreed to give 2 talks today. This is the first one, and there's one this afternoon. He has a very distinguished career. Before being at COMESA, he was at the Competition and Consumer Commission in Zambia, which I can tell you from having been involved in the ICN for many years, is one of the most active and innovative competition authorities in Africa. He ended up heading the Mergers and Monopolies Department there before joining COMESA. For those of you who aren't aware, COMESA is the common market for Eastern and Southern Africa. But we were just talking about the fact it is actually more Pan-African than South and Eastern African. It has 21 members. And it is very much like the DG competition of Africa. It achieves an extraordinary amount of coordination and cooperation between African competition authorities, and also, I believe, has a role in solving disputes if there are conflicts of interest or if there are different enforcement priorities. And I'm very lucky to know a little bit about COMESA thanks to my PhD student, Enyi, who's doing a PhD on comparative aspects of competition law in Africa. So this first talk is about navigating investment prospects in COMESA, legal and economic framework. Willard is very happy to be interrupted. And Peter, I'm sure you'll keep an eye on the chat online if there's anyone who's probably more people online than there are in the room for this one. So thank you, Willard, for taking the time to come and visit us, and we look forward to listening to your talk.
Thank you so very much, and thank you for your kind remarks on my humble CV. I hope after we finish our interactions today, we should know more about COMESA, or we should add more knowledge to what we already know about COMESA. As he has rightly put it, COMESA stands for the Common Market for Eastern and Southern Africa. It's an institution that has been there for some time, actually. It started as the Preferential Trade Area in 1981. So it was an institution composed of just very few countries in South and East Africa. I think when it started, there were about 3 of them. I remember for sure Kenya in East Africa, Zambia in Southern Africa, and I think Tanzania, if I'm not mistaken. Then it was transformed to COMESA in 1994 via the treaty establishing the common market for Eastern and Southern Africa. And the aim was to make it a common market, not just a preferential trade area, but make it a common market with elimination or significant elimination of tariff and non-tariff barriers. Then to cut the long story short, here we are today. We have 21 member states from southern part of Africa, eastern part of Africa, northern part of Africa, and the Indian Ocean Islands. So quite a diverse geographical coverage there, but we'll see some of those things as we progress with the presentation today. What am I here to tell you about today? As I was rightly introduced, I work for the Competition Authority, the COMESA Competition Commission, and as he rightly put it, it's like the DG Comp here in Europe. We look at competition matters, mergers and acquisitions as well, affecting 2 or more member states, so affecting 2 or more of any of those 21 countries. Once we have such conduct or merger, then our jurisdiction is invoked and will intervene to the exclusion of every other member state. And competition, as I'll talk about later, was introduced in this bigger scheme of the common market for Eastern and Southern Africa to ensure that the trade barriers in terms of tariff and non-tariff barriers that were abolished should result into tangible benefit, and not where undertakings operating in the common market will erect anti-competitive barriers that would even cause more damage and more devastation than the tariff and non-tariff barriers erected by governments. And the Thinking then was that the tariff and non-tariff barriers erected by governments can be moderated. The government has control over that, they can watch them. But for foreign conduct, if there's no one watching them, then the damage may even be much, much higher. So there was need to regulate the behavior of these companies that now had freedom to operate in different countries. That with that freedom, they may also entrench their positions to the detriment of other companies to operate across borders. That is how competition policy and law was drafted or promulgated in 2004, but its enforcement only commenced in 2013 for various reasons, administrative reasons. But today we are discussing more than competition. Today we are discussing navigating investment prospects in COMESA. And there are a number of other tools in COMESA, not just competition, that help to achieve the objective, the single market imperative. And we'll look at those today. Okay? So first things first, even before we get to the navigating investment prospects in COMESA, the legal and economic framework. Even before we get to this legal and economic framework, the question we should answer or ask ourselves is, why invest in COMESA? Why should investors be interested to invest in COMESA? So we'll start with the economic reasons. The first one is it has a GDP of over $1 trillion United States dollars. Now, when I make such presentations to folks in Europe or the US, or indeed the entire world, I always say $1 trillion may not be a lot of money, right? When you talk about $1 trillion for the US, that may not be a lot of money. But when you talk about that compared to the individual GDPs of COMESA member states, it's very tiny GDPs, 22 billion, some of them 10 billion, some of them even much lesser than that. So the individual GDPs of COMESA member states are very, very small, meaning these are very tiny markets. So when you combine them, they give you a $1 trillion US dollars. And when you look at the overall GDP for the entire continent of Africa, you find that that one is very close to the GDP for the entire continent of Africa. If I'm not mistaken, Isaac, you can verify that later. But the GDP for the entire Africa is just slightly less than $3 trillion. And Africa has 55 countries, so 21 of them in COMESA. It is 2/3 of the entire African continent. The population of over 640 million people. So again, this is a huge population. The entire Africa has about 1.3 billion. So 2/3 of that are in COMESA. So it gives you access to a very large market rather than small markets. As I said, COMESA spans from south, east, North and Indian Ocean islands. When you go to the southern tip, there's a country called Eswatini. It only has a population of about 1 million people. When you go to Mauritius on the islands, it only has a population of about 1 million, 1.2 million people now. When you go to the islands, Seychelles, can you believe it? Not long ago, there were less than 100,000 people. Less than 100,000 people. They crossed the 100,000 mark. Not a long time ago. I think they're about 102 now, and it was a big thing. They were so happy. But this is nice, the population is growing. But what am I trying to tell you here? The populations of our individual member states are also very small. Again, just like we said on the GDP, it means the market is very small individually. And that does really not attract meaningful investments. If you're an investor, you're looking for a big market, right? So sometimes when you look at 1 million people, it may discourage you. So COMESA brings in this collective population of 640 million people, access to raw materials. As we all know, Africa is one of the continents with huge resources, natural resources, I think that everyone else in the world is looking to have access to, whether you are talking about the digital world, whether you're talking about chips, whether you're talking about rare minerals that are used to make all these things, whether you're talking about land, arable land, whatever you'll be talking about, whether you're talking about copper to make electric wires, whether you're talking about cobalt and other such minerals to even make the so-called lithium batteries, you find those resources there. So access to raw materials in abundance. 2/3 of the population is younger generation with spending appetite. So we have, again, and like other parts of the world where we're seeing an aging population. And obviously, when there's an aging population, the more we age, the more we become reserved, right? Profession, when I was younger, I was not as reserved as I am now. I think I'm reserved now. So when you are younger, you are not as reserved as the old folks. So 2/3 of our population is younger, meaning there's lots of spending appetite because of their lifestyles, but also that gives us access to affordable and productive labor. Okay, while it may not be a very good thing in one way or the other, it has its own advantage. That labor in COMESA and Africa in general is relatively cheap. Okay, so those who may invest in COMESA or Africa, they are guaranteed of affordable labor compared to what may be in other parts of the world. And because this labor is young, it's very productive. So you have lots of able-bodied friends in these 640 million people. 2/3 of those are young. Very productive labor force. Large geographical coverage of 12 million square kilometers. So this one has its own advantages. We'll talk about the disadvantages later, but it has its own advantages in that it's a huge market, even from the geographical aspect of it. Okay. The legal reasons why invest in COMESA: organized legal framework. In the past, very few people knew that there existed a body of rules as exists in Europe to bring different countries to comply and conform to similar set of rules. It is now that people are gaining interest in this, and people, quite a number of friends I've met doing their PhDs and their masters on this, which is very important because now it is bringing out that knowledge on to the people. But there is an organized legal framework, rule-based trade and investment, fair adjudication and dispute resolution. And we'll look at all these and I'll show you practical examples of how this has been done. Fair adjudication and dispute resolution. If you're a businessman, if you're an investor, the first thing that would come on your mind is, in an event that there is a dispute, in an event that I'm aggrieved, in an event that my interests are offended, where do I run to and do I expect justice when I go there? Okay. In an event that a certain state thinks of expropriation or nationalization, is my investment safe? Okay, those are the things that come in. So fair adjudication and dispute resolution will look at all those things. Various legal instruments to support and aid trade and investment exist. So these are some of the legal reasons in addition to those economic reasons. Let's talk about COMESA itself. I think in principle, we started with this, this map. So it's just a pictorial view of what COMESA is there. We've spoken about all those countries. I already said it has countries from North, East, South, and Indian Ocean Islands. So if you see that color, I don't know if it is yellow. I hope I'm not being colorblind here. But if you see that color that is not in blue, it shows you what COMESA is, all the way from the southern part there up to all the way in the northern part there. In fact, the northern part of it just becomes our neighbors to Europe itself. I was in Tunisia not long ago before I came to the UK. So I had to fly through Frankfurt, Germany to come here. But I realized that some countries in Europe are very close to Tunisia, some of them an hour or even less than that to be there. So COMESA has extended, even trying to follow where Europe is and been very close there. Okay, so that is the map there. Let us now look at the COMESA legal instruments. What are these legal instruments that would give comfort to investors to invest in Africa? So we are saying these are overarching instruments to create a stable and predictable legal framework that facilitates investment and business growth. An investor does not just want to invest, he wants to grow, or she wants to grow. So through these legal instruments that are here, listed here, an investor is guaranteed of easy entry, but not just entry, an opportunity to grow as well. Competition, where I come from. And I think I did briefly explain how we try to facilitate a fair playing field in the market, but I'll get into details later. Payment systems. So COMESA has also made sure that it comes up with a payment system that makes it easy for importers and exporters, or even traders and businesses to make payments or receive payments. We'll look at that later. Banking, the Trade Development Bank, which makes it easy to give financing to projects that have an impact on growth and investment in COMESA. Insurance and reinsurance. Again, just as I spoke about the issue of predictability and availability of laws that will ensure that when your interests are affected, you have recourse to a system that will give you justice. So even in insurance, sometimes Africa in general is considered to be a risk investment area from a political point of view. Okay, I'll tell you that it's not all countries, but it's also a fact that indeed there are political risks there. But that's why we have all these insurance and reinsurance policies to ensure that your investments and businesses are insured against all these risks, including political risks, by the way. When you look at the instruments that institutions like the Trade Insurance Institute of COMESA has, it specifically among its provisions in the law covers political risks, insurance against political risks. Investment promotion, specific institution called the Regional Investment Authority, which is in Egypt. It's a COMESA institution as well, that is focused on just promoting investments, and I'm sure they'll be doing a better job than I on what I'm doing here, because that is their business, and ensuring that countries have consistent investment policies and laws. The judiciary, which becomes very important, the COMESA Court of Justice. And as you will see later in my presentation, we have the COMESA Court of Justice that has made pronouncements even against a country, made pronouncements against the member states in the favor of a business there. When the business has complained that this country is not complying with the treaty, as a result, my business interests have been affected. The COMESA Court of Justice have made rulings in favor of those companies, and even the interests that were affected reimbursed, if it is in terms of, if it is in monetary terms, reimbursed or refunded. Business, we have also what is called the COMESA Business Council. I'll talk about that later. And women and SMEs. Most of the people doing small and medium enterprise kind of business is by the women and the youth. They are the ones who are heavily involved in this informal sector. So COMESA is saying we will not just protect investors in the formal sector, we will not just protect investors at macro level or multinationals, but also those small businesses like SMEs and where women are involved. There are specific programs and specific institutions just to promote women and SMEs in business. Let us get into the details now. These legal instruments I've spoken about here, they are not just pronouncements. They have specific created institutions with specific laws that they administer to ensure that they achieve these. And these are the institutions here. So the COMESA institutions, please ignore, do I have a pointer here? Yeah, please ignore the heading there, COMESA Clearinghouse. I think that is an oversight. It should have been deleted because it's just one of the institutions. So the institutions come below here. We have the COMESA Competition Commission that has a specific dedicated legal instrument called the COMESA Competition Regulations. That ensure that there's fair competition in the market. So basically, if you look at the mandate of the Commission in a nutshell, it is simply to promote and encourage competition by preventing or prohibiting restrictive business practices across borders, of course, because that's how the jurisdiction is involved, across borders, restrictive business practices that deter the efficient operations of markets, and it goes further, and that all conduct that is offensive to consumers would be punished. That is what the COMESA Competition Commission does. The Regional Investment Agency, remember I spoke about policies to promote investments. The Regional Investment Agency is responsible for ensuring that the COMESA Common Investment Area is realized. So COMESA says we will not be individual in attracting investments, okay? We will attract investments as a region, and they've created what is called the COMESA Common Investment Area. Now, I'll tell you, what is the importance of this? Why can't you just think of investing in Zambia without, obviously when you invest in COMESA, you invest in the member states, so it will be those same countries, Egypt, Eswatini, Mauritius, Zimbabwe. But why should we be thinking about it in line of the COMESA Common Investment Area and not just Zambia, for example? Why? Because those member states of COMESA, who are also now part of the COMESA investment area, have agreed to a set of rules that should apply to those investors, whether they're in Egypt, whether they're in Tunisia, whether they're in Libya, in North Africa, or whether they are in Kenya or Burundi or Rwanda or DRC in East Africa, that once an investor invests under this framework, they will be subjected to the same rules from one country to another. And remember, I talked about rules against expropriation or nationalization, that regardless of what happens in that country where they invested, as long as they invested under the common market investment area, there is no way a government would say we'll nationalize, for example, if there's a framework operating in that area, because it would be against the treaty. And as I've told you, the treaty has even ruled against member states before. So it gives you protection as an investor. Like I come from Zambia myself, so maybe I'll be a bit free to mention Zambia. But Zambia cannot just wake up today and say, we are invoking the state's power of eminent domain, and this company is now ours. Because these things happen in the world, right? They do happen. Where countries have just woken up and said, this is now ours. Okay, but under the COMESA Common Investment Area, we are saying that is unlikely to happen because there are rules, laws, and policies which all these countries have agreed to conform to and comply with, and among them is that risk. We go to the COMESA Business Council to ensure that the businesses operating in COMESA have access to what we call COMESA police organs. So COMESA police organs are the highest level meetings of officials, ministers of trade, central bank governors, ministers of foreign affairs, ministers of agri, all these important sectors that you may think of. Those are the police organs. The COMESA Business Council's role is to be a business association at COMESA level that directly finds itself in those meetings to represent the interests of businesses and other investors directly to the policymakers. So they would speak to them directly rather than listen, rather than being heard from the papers or complaints, they will speak directly to the policymakers in those meetings because they are given audience. So if you are one of the investors and you choose to be part of this COMESA Business Council, you will be assured because it is the voice of the private sector in the region. And it's not just a voice that speaks like a pressure group, then some article is written in the newspaper so that the minister hears. No. It will speak to the ministers in COMESA directly through these policy organ meetings. They are the highest level meetings of this multi-state institution called COMESA. Then we have the COMESA Clearing House. One of the problems that COMESA faced when it started its operations was the payment systems, different currencies, different legal frameworks of making payments, different levels of efficiencies in different countries. So that was an impediment to ensuring the smooth flow of trade by businesses that were operating there. So COMESA thought of coming up with what they call the COMESA Clearing House. So the COMESA Clearing House, the way it operates is that it creates a platform through which businesses and traders can make payments and receive payments in a currency that is stable, and also attempting to reduce their transaction costs that are incurred by businesses in the process. They've made sure that they've integrated the central banks of all the member states. So once, if you are operating in one of the member states, you can use the central bank of that member state to access this platform to make payments to wherever you want to make payments in the common market, but also beyond, if your business involves other players outside COMESA. So that becomes easy, and it has created that certainty in the market, but also confidence of the system that works. Africa Leather and Leather Product Institute, I may skip, but it's an institution basically that is involved in the production and development of the leather sector. The Trade and Development Bank, it used to be called PTA Bank some time back. Remember I said COMESA started as PTA. It transformed itself into what is called the Trade and Development Bank. This is one of the banks with a force to reckon with in Africa, competing favorably with banks like the African Development Bank and the like. It is a banking and financing arm of COMESA. And it has even gone beyond COMESA member states to non-COMESA member states, both in Africa and outside. ZIPRI is a French acronym, so I will not attempt to mention it in French, but I'll explain what it does. It is a reinsurance institution. So it insures insurances. So if your business has been insured by the next institution, they are called ATI. It is basically an agency of trade insurance under COMESA. That insurance may even be reinsured to make sure that your business is safe, even if something went wrong with ATI. But it also develops capacity for all insurance and reinsurance companies in COMESA. And then COMFWEB is the one that deals with called the COMESA Federation of Women in Business, trying also to make sure that our women do not lag behind. They are part and parcel of this business network, and it's easy for them to operate in this COMESA. So this one is dedicated specifically to the women, noting that the women are largely involved in the informal sector, and noting that bigger part of the economy in COMESA is actually informal. So there was deliberate policy there to develop an institution and give it its own legal instrument just to look at women issues. Okay, if there's any question, please, or any clarification, feel free to ask me so far. Okay, so now let me try to go to some of the details of these institutions I mentioned here. We'll not go into all of them, but we'll pick some of them. I think especially competition and the COMESA Court of Justice, which unfortunately is also missing in my list here, but it's there in the presentation inside. So competition, maybe since I'm coming from competition, We need to maybe talk about it a little bit more on how it facilitates investments, how it ensures that there's growth, how it promotes trade between member states, and how investors, knowing that there is a functional competition authority and the functional competition law, may be attracted to come and invest in COMESA. Because there's empirical evidence. Professor Sean Ennis has been doing in this business of competition for a long time. And some of the things I'm quoting the OECD there, maybe they tell me that, no, that quotation, you're cheating, that's not what is there. So he's been involved in these things, and he will agree with me that there's empirical evidence that countries that have sound and efficiently operating competition laws actually tend to attract more investments than those that do not have. And mark my words, I did not just say countries that have competition laws. I said countries that have sound and efficiently implemented competition laws. So it's one thing to have a good law on your statute books, it is another thing to have it effectively and efficiently implemented. Effective and efficient implementation now depends on the political will in that country, the quality of staff in terms of skills that you employ, the structure of the organization, and the number of other issues. Okay, so competition. Regional competition agreements can promote convergence in competition laws and instruments, ensure effective and efficient cross-border enforcement, and or support young authorities in their efforts to create a competition framework coherent with international standards. All these things that the OECD said in 2018 are the things that the COMESA Competition Commission does. So I want to pray that the OECD did not look at the European Union when they came up with this. The European Commission, which has been there for a long time, which is our brother, and our system of regional competition enforcement in COMESA is actually premised and anchored on the System of Competition Enforcement Act, the European Commission level here in Europe. It's the very same system, exactly the same, even in terms of how we share or divide or demarcate jurisdiction between us and the member states. It's exactly the same as it is in Europe, based on thresholds and things like that. Now, when the OECD said regional competition agreements can promote convergence in competition laws, let's look at convergence. They were very right. One of the functions of the COMESA Competition Commission, which is an institution with the mandate to implement and enforce the COMESA competition regulations, which are regulations that have jurisdiction in all 21 member states. One of its mandate, thank you. I told you that I like fidgeting around, but I'll be very close to the mic. One of its mandates is to ensure that it develops laws and policies on competition in all the 21 member states. So regional competition agreements can promote convergence in competition law. And why are we trying to do this? To develop policy and law from a COMESA point of view to all the member states. We are trying to achieve convergence in competition laws. I'll tell you that when we commenced our operations in 2013, we had very few countries with competition laws and with diverse principles and modes of enforcement of those competition laws. Today, as we speak, because of the COMESA Competition Commission, we have 19 out of 21 countries with competition laws. Now, that is good if you are a business. As I say, if you are a business, you want to operate in that environment where if there's an anti-competitive conduct by someone that may frustrate your business, that anti-competitive conduct may be addressed by a functional competition authority and an effective law. So it's very, very important, because if you're operating in a country without functional or effective competition laws, then if there are anti-competitive business practices that offend your own interests, then you are in trouble, because you may end up exiting that market. This is what happened when competition, right? So that was the first thing we thought of. We need to have competition laws in all our countries. Today we have 19 out of 21 member states with competition laws. The one remaining one of them is Somalia. It is the newest member state. I think it joined just around COVID time. We have some problem with Somalia, that there's quite some political instability, sadly so, unfortunately. So it has made it a little bit difficult for us to develop this law there, because it's difficult to find who to deal with. Because of the instability, there is no continuity. So it has been very difficult, but we've been making efforts. The other one is Eritrea. I said only two don't have, but Eritrea now, we are very fortunate that after years of making efforts of trying to do that in Eritrea, they have come now to us and said they are ready. And Isaac, I think, will be there in August. We'll be there in August to begin the processes of ensuring that even Eritrea has a competition law and policy, which will make 20 out of 21. God willing, we hope the conflict in Somalia may end soon, so that we'll be very proud to say we have competition laws and authorities in all the 21 countries. So as a result of that, we have tried to get to convergence, because those that we've helped have similar principles and approaches. They may not have exactly the same wording. Convergence does not mean have the exact wording of the law. No, but it means have similar approaches and similar principles to these issues. And this is what we've tried to achieve in some of these countries. And this ensures effective and efficient cross-border enforcement. Very, very important if you're a businessman or a businesswoman who wants to invest in one country in COMESA and would love to have access to other COMESA countries. As Peter, sorry, I forgot about the mic again, I've moved. As we will observe later, where we have certain companies that have investments in Egypt, exporting to other countries. When they find trouble in those other countries, they have recourse to a system that will help them overcome that trouble. So it's very important to ensure effective and efficient cross-border enforcement when all these countries have competition laws. Why? Remember, number one, national competition laws have jurisdictional limits. So they cannot go beyond their borders to enforce their laws. So if the company that is involved in certain conduct that creates anti-competitive effect in your country, and they are based in another country, it becomes very difficult to deal with that issue. I know all the laws, even in COMESA, say they talk about the effects doctrine. So they say as long as this conduct has an effect in Zambia or Malawi, we have jurisdiction. Yes, you have, but to address that is not always easy. So COMESA comes in because it will have jurisdiction in all the 21, so it will address that conduct, and as we'll see in the presentation later. But COMESA also, to work well, needs to have competition authorities that are sound and that are aware of the law, that are aware of these principles, because we engage those competition authorities sometimes to assist us to obtain evidence and the like. Okay, we closely work with them to even establish the theory of harm that we are looking at, and also the assessment. So if those countries have competition laws, it ensures effective and efficient cross-border enforcement, but also support to younger authorities in their efforts to create a competition framework coherent with international standards. Professor Ennis, you will recall that not long ago you were in Tunisia, and you were doing some capacity building for the Tunisian officials, both from the Competition Council, not in fact, both, more than that, from the Competition Council, the Ministries of Trade, and other stakeholders in Tunisia, even though Tunisia, in fact, is not even a young and newer agency. It's an old agency. But to ensure that we keep everyone up to date with emerging trends and also just recapacitation, we do that from one country to another country so often, and that also leads us to what I call practical convergence, that you keep on discussing together what it is that you are doing at regional level, and then in the process, everyone has a common approach to issues. We do that. Again, Professor Ennis, I'll mention that you will recall we were in Mauritius doing the very same things. And we do that year in, year out, just to ensure that there's that convergence in the interest of business at the end of the day. Okay, there's been a proliferation of competition laws. This one, I'll quickly go through this slide. And the reasons are the same ones that I've given. At the global level, there are now more than 125 countries with competition laws. In Africa, more than 46 countries have these laws on their statute books. Africa has 55 countries, 54, 55. Sometimes there are disputes on the 55th country, but 54, 55. 19 of those countries are in COMESA, as I said. The increased adoption of competition laws and policy at national level has had a ripple effect on the need for effective regional cooperation on competition as well, because we discovered, at least in the context of COMESA, that fragmented approach to competition enforcement was not giving the outcome that everyone would have wanted to see, especially if the matter was a regional matter. Okay, I think this one we've spoken about it, but let me just quote the OECD again. The OECD says, since regional integration is often combined with trade and investment liberalization, competition law and policy becomes crucial, as benefits of trade and investment liberalization should not be compromised by cross-border anti-competitive practices and be appropriated by private undertakings by means of their unlawful conduct. I spoke about this. We recently fined a certain company, a very big company. It's a multinational company that has invested in COMESA, big company. I'm not mentioning it now for obvious reasons, because we've not yet agreed on what should go in the public and what so there are still confidentiality issues that we are discussing. But we find that companies, big multinationals all over, it's here in Europe, it's in America, it's all over, it's in Asia. It had invested in COMESA quite well. That's what we are looking for. And I think it took advantage of all these protocols to facilitate that investment, doing business very well. But what it engaged in was what we call market partitioning. So it partitioned the markets very, very well and made it very difficult for its distributors to deal with any other company that would want to enter those territories through terrible exclusive contract arrangements. So as a result of that conduct, it became very difficult for others to invest, not because of government or state policies, because state policies are facilitating that, but conduct. And that is why OECD here is saying these liberalization policies should not be compromised, by cross-border anti-competitive practices and be appropriated by private undertakings by means of their unlawful conduct. So that company invested very well, took advantage of these policies, and once it invested, it wanted to be the only one benefiting from this by virtue of its unlawful conduct. So because it was operating in a number of COMESA member states, our jurisdiction was invoked and we said, hold on a second, you can't continue doing this. You have to stop, you have to be fined, and these contracts have to be nullified, and we achieved that. Okay, so the role of competition policy and law in facilitating cross-border trade investments, I think we've spoken about this, so I'll just read. Competition law is among the tools to ensure regional integration. The benefits of regional integration includes access to larger markets and enhanced trade between member states. Regional integration, competition tools is among the tools to ensure regional integration. The company that I just gave as an example, do you think its conduct was assisting regional integration? Ma'am, what do you think?
I'm here listening and not exactly from this field of knowledge.
Okay.
I do research on platform regulation and systemic risk.
Okay.
I have different questions, but I can ask.
You bring them later?
Okay.
Okay. Oh, you wanted to bring it now?
No, this is up to you. I can bring them later because, yes, you can continue.
Okay, thank you.
Yes.
Thank you. My PhD student there, the behavior of the company that I've just spoken about, do you think it was promoting integration? And if no, why do you think so?
I don't think it was integration. I think it was more in direct opposite of what it was meant to be, because it was, rather than bringing the region together, it was keeping them distant with the.
That's correct. Partition in the market. The aim is to create one market for everyone. Its behavior was partition in the market. And those who attempted to make sure that this market is one, it put in contractual obligations that no, you cannot come and deal with. You just deal with me, not anyone else. So this is what the OECD is saying, that we don't want that. Okay. This one, I think I can also go quickly. Previously, most competition laws in our part of the world were mainly a consequence of the World Bank and IMF structural adjustment programs in the early 90s. So people adopted these competition laws, not because they wanted competition laws, and not because they saw the benefits of competition laws, but they were ticking the box. Because World Bank said for us to continue with these structural adjustment programs, among the policies you need are competition policies, investment policies, privatization policies at the time. So they were ticking the box, but later on, everyone started appreciating that, in fact, these laws were very important and even advocated for the development of a law at regional level, which is a COMESA law. And because now they've appreciated more the importance of these competition laws to investment, we are even doing the same now at the entire African continent level through what is called the Africa Continental Free Trade Area. So the adoption of competition laws at the regional level has had a direct impact on adoption of laws and establishment of institutions. So COMESA, for example, established the Regional Competition Authority in 2013, and through member states' support by this authority, the member states have adopted competition laws and reviewed existing competition laws. The convergence that I spoke about, Eswatini, they adopted the COMESA competition regulations in 2017, so convergence there. Malawi has done the same 2024. Mauritius, we are doing that now, harmonization of the national competition law with the regional law. Uganda, in fact, for them, the entire COMESA competition law is the law of Uganda on competition there, in addition to their own. Zambia similarly did that, so just among a few member states there. Okay, we've spoken about regional integration. The objective of COMESA, we spoke about this, is to attain full market integration. Therefore, firm conduct is seen as a danger to this agenda. This is an important issue that is not just in the COMESA competition regulation, but in the foundational treaty establishing the common market for Eastern and Southern Africa itself. This treaty that brings together the member states, the founding fathers were very clear under Article 55, because they said any practice that negates the objective of free and liberalized trade shall be prohibited. Member states, they were very clear about it. Member states, ask the member states, in its entirety, no reservations or something like that. In its entirety, we member states agree to prohibit any conduct that negates the objectives of free and liberalized trade. And they went ahead and said, to this end, we agree to prohibit any practice, decision, any agreement, decision, or concerted practice which have as its object or effect the prevention, restriction, or distortion of competition in the common market. It's a treaty obligation even before it goes to the secondary instrument, the regulations. It is there in the treaty, very important. The jurisdiction of the COMESA Competition Commission, as I said, is on conduct that affect 2 or more member states. So where only one member state is affected, you deal with that country and the law of that country will apply. The advantage is, as I've said, you are still assured, because of this COMESA system, that in that country, there is a working competition authority, there is a working competition law, because we've worked so hard to ensure that all those competition laws are working. But once it affects 2 or more countries, we are even more assured that your matter will still be dealt with, not by the law of any one of these single countries, but by the COMESA competition regulations. And we are saying there is no clash in jurisdiction between the national competition laws and the COMESA competition regulations. Why? Because where the matter is national, the regulations have no jurisdiction. Where the matter is regional, national laws have no jurisdiction. And you agree with me that even from a practical point of view, Malawian law cannot apply and successfully punish companies that are existing in Egypt and engage in anti-competitive conduct. Okay, what is the overview of COMESA's legal and regulatory framework? We may need to appreciate this. The treaty, as I said, is the beginning of foundation. Article 55 of this treaty, Article 5 of the treaty puts an obligation on member states to ensure that they give the regulations force of law and the necessary legal effect in their countries. Not just the competition regulations, all those other instruments I spoke about. Article 5 says, you shall give them force of law, and the word shall, for colleagues who are lawyers here, shall and may and will become very important words. The word shall was used. They shall give the regulations force of law and the necessary legal effects. Article 10 even becomes more instructive. It says all these regulations are binding on all the member states in their entirety. So the regulations that are promulgated pursuant to the treaty are binding on all the member states in their entirety without any reservations. It's a treaty to which all these member states have acceded to and ratified. Article 19 creates the Court of Justice, the COMESA Court of Justice, which is responsible for the interpretation and application of the treaty where there are disputes. We'll talk about the COMESA Court of Justice later. And then Article 55 is just what I spoke about, a general prohibition by governments of member states saying we don't want anti-competitive conduct by companies operating in the common market. Collectively, we say no. Collectively, we say let there be fair markets because we want to attract investments. We don't want investors to be scared that the market is rife of anti-competitive conduct and their prospects of survival are minimal. COMESA competition regulations, I think we've spoken about this, the mandate, we spoke about it. What is our function? We've gone this into details to monitor and investigate anti-competitive practices, the harmonization of national laws with the regional law, cooperation and capacity building. We've spoken about that. Okay, now let me quickly go to some competition cases handled by the Commission, just to give investors and those that are thinking of coming into COMESA a feel of what we do, and that if their business happened to be that one which is affected by the conduct of others, they have recourse to the COMESA Competition Commission to address that. So I'll quickly talk about this case. It involved what we call the Confederation of African Football. So it may be the mean FIFA for those of you who follow football, or the UEFA of Europe, I think. It is responsible for managing all football in Africa. This CAF, it had entered into a long-term agreement with a French company called Lagardère. I think it has changed its name now. Yeah, the famous name is Spotify, right? But the famous name is Lagardère Sport. It entered into this long-term contract to be the Lagardère to be the exclusive and sole intermediation agent for CAF. So basically, responsible for the commercialization of CAF's marketing and broadcasting rights. Okay, so you see, for those who may be invested on football, you see when there are these big tournaments, you see adverts by Total, you see adverts by Adidas, Nike, and all these big brands. Those are as a result of what we call marketing rights. Then there are broadcasting rights. You see the broadcasting houses that will be responsible for airing those matches, who have the rights to transmit delayed highlights, delays, live, near live, or something like that. Big business, by the way. So CAF had entered into that long agreement with Lagardère, and Lagardère was the only one since the 1990s. But there was no COMESA Competition Commission then, so we could not go all the way back. But by 2013, when the COMESA Competition Commission started its operations, it looked at this and said, this cannot be. Why do we need to only have one company that has this exclusive arrangement with CAF? And this involves huge sums of money. Football is money, huge sums. What were the effects that we saw? Or before we go to the effects, what were the contractual arrangements? The contractual arrangements were that Lagade was the exclusive intermediation agent for so many years. Mostly, in most cases, the contracts would be for 8 to 12 years. And then there were automatic renewal clauses that once the 12 years comes to an end, a year or two before that, an automatic renewal clause would be invoked. If CAF was not interested in continuing with Lagade but with another, they would need to go back to Lagade if they are offering that other company better conditions than Lagade. And then Lagade would have the final say on whether they are proceeding or not. So this agreement was to go on and on until 2036, still with automatic renewal clauses. Okay, and what we saw was the high prices for broadcasting rights in Africa, football, that most countries could not even afford to have these matches aired in their country, meaning it became very expensive for the consumer to watch, but also difficult for other undertakings that could have entered that market and even improved the quality of football in the market, because, or even broadcasting, because there would have been competition. They could not because of these agreements. So COMESA came in and said, this cannot happen, but in so doing, we ended up having what we called the commitment decisions, where the contract was cancelled and CAF was told what to do in the future. For example, that for all such contracts, they should have short durations, 4 to 5 years or 8 in certain instances. And all such contracts should be exposed to a competitive tender process. So that everyone, if you want to come and be part of this market, you are given an opportunity. And we closed the case. Unfortunately, when we took it to what we call the committee responsible for initial determinations, they rejected that. They said, no, this matter cannot be closed. These guys should be fined. Now, I remember I talked about the rule-based framework, okay? Rules. What safeguards are there if we make a terrible decision, even ourselves? Is your business safe? Is there a recourse for you to take this matter to another board that can review? So for us, we went to the CID, because for us, once we are done, we go to what we call the committee responsible for initial determination. We've achieved our objective. This conduct is no longer there. We do not want to continue going on and on with this case. It is expensive for the authority. We've achieved our objective. They've stopped this conduct. We've given remedies on how they should conduct their business in the future to ensure that others participate, investment that we are talking about. So we are closing this case. The CID said, oh no, we are not closing this case. These guys need to be fined. So those guys appealed the case of the CID to the what we call the appeals board, the COMESA appeals board. And in that matter, we sided with CAF and Lagade, because for us, they had done what we wanted to do. And we sided with CAF and Lagade at the appeals board, and the appeals board upheld the original undertakings given or remedies given by CAF to the commission. Now, the appeals board faulted the CID, not so much on substance. They faulted the CID that if the CID chose to fine, which is a very important safeguard for business, if the CID chose to fine, they should not just have pronounced the fine, they should have given Lagade and CAF an opportunity to defend themselves on the fine. And this matter should have been investigated properly, even in terms of the quantum of fine that was going to be imposed. But without all those rights and safeguards for Lagade, the CID just said, we are fining you this amount. So the appeals board quashed the decision of the CID on procedure. There was an option for the CID to appeal, but the CID cannot appeal. It's a quasi judicial body that uses the COMESA Competition Commission to defend or argue its cases if there's an appeal. The COMESA Competition Commission in this case was against the CID, which also shows you that this is a system that is working. Even if all those are COMESA institutions, they can actually say, we don't agree with you. Okay? So this one again shows what I was telling you, that there's a system of laws that that exists there. The next one, which was a fine of $300,000, which was imposed on CAF and BIN. Now we move from Lagade. Remember Lagade, I said, was an intermediation firm that was responsible for ensuring the commercialization of the broadcasting and marketing rights of CAF. Now we are at the actual broadcasting. So Lagade had brought in BIN Sport, which had terrible exclusive conditions as well. So BIN Sport, especially in the Middle East and North African region, BIN Sport had the exclusive rights to broadcast CAF tournaments for so many years equally, some of them 8, 12. It had also automatic renewal clauses, just like was in the case of Lagade. So there was an issue of long duration, automatic renewal clauses, and exclusivity. So do you know what that did? What that did was that it closed out the market to any other broadcaster. Exclusivity, I am the only one who's been given the right to broadcast CAF rights, CAF games, tournaments. These are huge sums, sometimes amounting to, like I said, our market is small, so certain amounts of money are big. Like the Lagade contract was amounting to $1 billion United States dollars. Huge, huge amounts. I'm the only one, exclusive. And then the exclusivity is not for a short duration, for a long duration, with automatic renewal clauses. So if I keep on going, and these BIN Sports were going all the way to 2028, it means all these years no other would enter. And if no other will enter, it means there is no competition, there is no innovation, and the product or service remains static. That's the danger for the consumer. And then in this case, even the rights were bundled. So these rights of broadcasting may be sold as separate packages or bundles. Separate packages, what do I mean? There are so many rights there. Some of them are, like I said, live transmission, delayed transmissions, what is the other ones? We call them slow motion or what? And then also highlights. Thank you. And also the issue of the platforms to use. Others were terrestrial, others were cable, others were satellite, others were mobile, internet, and things like that. All of them were bundled together and given to one. And you know what was happening? Others were radio. Okay, where I come from, there are certain rural areas where radio is the main means of communication, very deep in the rural area. So you find my old grandparents and cousins, when there's this much that they like, all of them are glued to that radio. But what was happening now, because all the broadcasting rights were sold as a bundle, it means they were so expensive. So that one who would want just for radio cannot afford, meaning you deprive the consumers of that service. And this one, because they're dealing with high-end consumers, us in the urban areas who do not want to listen to the radio for much, we want to see how loud your message is scoring. We want to see what we only take that part. Even if we bought everything, then the others remains unexploited. Okay, that was the danger there. So even here we said this cannot be, and on this one we recommended to the CID that they should be fined $300,000 each, meaning $600,000 in total for CAF and BIN, because they were on that agreement. But you asked me a question, $300,000, are you guys jokers? Because I think we are. When you talk about this, CAF and BIN are not small companies. What is $300,000 to them? Unfortunately, our law is very bad. I think when it was made in 2004, someone thought $300,000 was a lot of money. I don't know. But that is the maximum that we could impose. In fact, we went to the maximum limit of the law, unfortunately. But the law now is changing. So if there are those that are listening to me and they're in the habit of anti-competitive conduct, Please know that the law now has changed. There is no limit. It is simply a maximum of 10% of your annual turnover in the common market without a limit. So be very careful. But anyway, we imposed the fine of 300,000. Again, CAF and Beansport appealed. They were not happy, and they said the commission and the CID, the committee responsible for initial determination, has not properly discharged its responsibility in that they have not established the case. So we are appealing this decision, and they were given that channel of appeal to the appeals board. Even at the appeals board, if the commission, the decision of the appeals board came against the commission, there was room to appeal to the COMESA Court of Justice. Or if these guys continued being aggrieved at the appeals board, there was also room to appeal at the COMESA Court of Justice. But as they appealed in the background, they came to us and said, we want to settle. Let's not go on and on this issue. So we told them we can only settle if you stop doing what we've told you to do, and you still pay the maximum of 600,000 because that was. And they said, okay, we are going to do that. So one would be wondering then, what was the issue of the settlement? Because they still paid the maximum. They still complied with the remedies that we had imposed. So what was the issue of settlement? The issue was that they simply did not want that term that you are liable. So they said we've agreed to settle and pay the amount without admitting liability. To us, that was not a problem. We had achieved what we wanted. Maximum penalty paid, conditions put, compliance instituted. Yes, sir.
Dr. Mwemba, I'm very sorry to cut you short, but we've only got 5 minutes left. I just want to allow a little bit of time for questions.
Oh, 5 minutes. Okay.
We'll have to go.
Thank you.
So would you just like to maybe wrap up in 30 seconds? You've raised some very interesting issues and fascinating cases.
Let me quickly skip all these, and I think just talk about the COMESA Court of Justice, okay? Give me just 2 minutes. So all matters that finally cannot be resolved in any of these areas of law that I've mentioned find themselves at the COMESA Court of Justice. And at the COMESA Court of Justice, as I said, it may not just be private parties, but it may be even private parties against the state. So it is responsible for making final determinations wherever there is a dispute. And I'll give you an example of a case called Polyto Paints and Adhesive Manufacturers Company Limited. So in this case, there was a company that was supplying Polyto Paints to the Republic of Mauritius. And Mauritius at some point imposed customs duties, okay, on this company. So this company said this is against the treaty because it says if you're a member of COMESA, products should move duty-free from one country to another. So this is illegal. And they sued the government of Mauritius. They had to exhaust the so-called local remedies. And in Mauritius, throughout the legal system of Mauritius, up to the Supreme Court, they lost the case because Mauritius was saying we are not bound by the COMESA Treaty. So the matter finally went to the COMESA Court of Justice. And at the COMESA Court of Justice, the court was very clear. It says any member state that acts contrary to the COMESA Treaty cannot plead the nature of its legal system as defense when citizens or residents of that state are prejudiced by its acts. Because Mauritius was saying we needed to domesticate this in Mauritius. It's not enforceable. So the COMESA Court of Justice said, no, as long as you are a member of this club, you cannot plead the nature of your legal system as defense. So what you did was wrong, and you should stop that and refund the company. And indeed, they stopped that. And the good thing is they even amended their tax or customs act later on to ensure that that was not the case. The recent one is called Agilis, again involving Mauritius and Egypt. I don't know the reason why, but similar case in this one, so-called edible oils from Egypt into Mauritius. This one was not about imposition of customs per se, but as a safeguard measure to protect their market, which is allowed in the treaty, but certain procedures have to be followed. Mauritius, again, did not follow those procedures, and the COMESA Court of Justice found it liable. except they've appealed, because even at COMESA Court of Justice, there are two layers, the first instance and the appellate instance. So we'll see what will come out from the appellate instance, from the appellate division. Let me end here. I think what I was trying to show you here is simply to say there's a rule-based system that is able to provide safeguards to investors and their investments in COMESA. Thank you very much.
Thank you. So, first of all, Peter, do you have any questions online?
They've all been very well behaved and good, and compliments from the Competition Commission from Pakistan, by the way. We'll just ask now if there's any questions to come up.
Okay, great. Any questions in the room?
Okay, I have two quick questions. As Brazilian Italian, I understand very well the difference between having good laws and make them a reality. So my first question is, I'm thinking about a hypothetical situation in which there is a political crisis, unrest in a particular member state, and this propagates across other COMESA member states. I wonder about the capability of COMESA to withstand this systemic crisis, for example. And the second question is because there has been a discussion about the common market, the benefits for businesses, but I wonder how this investment is translated into the benefits of local communities. Thank you.
Thank you very much. Should we address maybe also?
Yeah, I'm going to questions.
Yes, so I think I have a more general question. So you said that the main objective of COMESA is to create regional integration of one market, but I think naturally or inevitably there would be investments that would create advantages of one country over another. So so I want to know that in general, how do you draw the line between what is legal conduct and what is the non-favorable conduct?
Thank you. So I'll start with the first question. So I think our question is, if there is political crisis in one country and it spills to other countries, does COMESA have the capacity to address that? My honest answer would be, first of all, we've never been confronted with such a situation yet. So it would be difficult to really say with absolute certainty how we may address that. But secondly, my good guess would be that it's very difficult for this large geographical market to find itself at the same time in that situation. Okay, so we found ourselves in situations in a few countries here and there, but because it has not been the entire COMESA, the functionality of COMESA still continued without a problem. But if we are to be faced with that, I guess it would be a serious crisis. I'm not so sure how that would work. But my comfort is that so far countries have demonstrated that they are complying with this, and we hope the crisis will and should never happen collectively for COMESA. Then what was the second question? Just remind me again.
The second question is how these COMESA's investments are translated into the benefits of local communities.
COMESA investments translated into the benefits of local communities. Very easy question, especially, very easy answer, especially from my competition point of view. Remember the cases I gave you? I'll just go back to those cases. The cases I gave you was, it became expensive for certain other companies to enter the broadcasting market. So broadcasting rights were very expensive. As a result, most of us as soccer fans would not watch football. Because the law applied, that conduct was stopped. There are a number of other broadcasters, broadcasting rights will become cheaper. There are so many watching football today. So it happens like that in each and every other field. Okay? Thank you. Then there was, remind me your question again.
So how do you draw the line between what kind of company or investor conduct would divide give advantage to one country over another?
Look, obviously that is true. COMESA, despite being one market, there are other countries that would be more favorable to investors than others in terms of access to raw materials, more stability of the politics, and so it's true. But the aim of COMESA is that when we attract that investor to come into that country, it should not be difficult for that investor to have his or her products go into other countries. The products should easily, if they so choose, to engage in cross-border. Even if they are just in Zimbabwe, there should be a situation that makes it very easy for their products to move around in the common market. So yes, some countries actually may attract more investments than others because of different factors, but because of the COMESA common investment area that we are talking about, they'll still have similar policies, similar rules that you can operate from here, but have your products for them. Okay?
Okay, I think we have to close this out, unfortunately, for today, because
So sorry.
room will be needed afterwards. But I would like to thank, on behalf of Andre Stefan, who had to leave himself to go do some teaching activity, I think, and the Center for Competition Policy, of which I'm the director. Thank you so much for being here with us today, Willard.
Thank you so very much. It was a pleasure.